Hi there guys, it's Paul, and in this particular video we're going to be talking about in-trade management psychology. We're going to be covering 6 main different topics. First one is hesitation on pulling the trigger. Second is stop loss placement mistakes, taking profits way too early. Lastly, we're going to be talking about the whipsaw and the psychological consequences of what happens when your trade does get whipsawed. So now let's just go into my screen and we're just going to be covering these topics in more detail.
Okay, so for argument's sake, let's say that your trading strategy is a simple range breakout strategy. So once a candle hits full momentum, you just place your entry order, stop loss just underneath that candle, and hopefully everything will go the way it goes, and hopefully it's just going to be in huge momentum. So let's say that we have a rather typical range here, as you could tell, and then here we go, momentum, quite a bit of momentum, as you could tell, is quite big. Let's say you place your order just there, stop loss just below there, something like that, and then you just hopefully wait for the momentum to kick in. So your entry gets entered here, and then it moves and hits your stop loss, goes back to the range. So we had a fake out, and you're a bit upset about this. You're just thinking, bloody hell, obviously I'm gonna have losing trades, that's part of life, whatever. So then we just look for other opportunities. Let's say again, oh, look at that, we have like a big momentum trade up. Let's say we place our entry there, stop loss just below that, let's below that candle, and you just you decide you just basically place this order, and then again it gets triggered, it just messes around, and then you get stopped out again. Second time in a row, and now you're just thinking, bloody hell, this strategy is just stupid, it's not working, so I don't understand what I'm doing wrong. Is it like, and then you're just thinking, okay, I'm really just annoyed by this. And then let's say we have a entry here, huge momentum here, big momentum trade here, and you're like, you know what, I'm not going to take part in this trade, because this particular setup was just completely just giving out false signals, and I just don't want to take part in this trade anymore. And then it just rides down, all the way down, and you just lose a completely fantastic opportunity. We get this time and time again. Hesitation for new traders tends to occur all the time, guys. It's a very, very big problem among new traders, especially ones that are starting out. You need to have the courage to pull the trigger, despite having 2-3 losing trades in a row. I know it's difficult. I know your psychology starts, you start thinking crazy thoughts in your head, and you start hesitating, you have like anxiety before you place the trade, because you think it's just going to be a losing one. And then once you decide not to take part in the trade, it just does a huge rail track downwards, and then you just lose a huge opportunity. Next, we have the whipsaw, which is one of those things that happens to every trader who is either professional or amateur, and can be a root cause to a lot of trading problems which new traders develop. So what is a whipsaw? It's very simple. Again, this is for argument's sake. This is not a perfect setup, but we're just going to use this for argument's sake. So here we have just a swing. Again, just prototypical swing formation, pretty good. Fibonacci retracements around a 61.8 level, very nice, everything's great. So we have a huge momentum, it's not huge, but we have a big momentum candle here. Let's say we place our entry here, stop loss is here, okay? Obviously your stop loss can be somewhere else, however, I'm just doing it for argument's sake. And you get entered here, and then your candle stops you out here on the stop loss, so you have a losing trade, and then it keeps going in the direction of your trade. And this is extremely detrimental to some to the psychological aspect of your trading, because then you start doing a lot of stupid mistakes, like the no stop, not putting in your stop loss, having, just normal stop loss mistakes, and widening the stop loss way too much, so your risk reward ratio is not good, or taking profits too early. Just a lot of I'm going to cover all those aspects in more detail, but the whipsaw happens to everyone. Don't worry if you get whipsawed, it happens, and just carry on. Just keep sticking to the strategy, keep disciplined, and don't worry about it. I know it's easy to say it. I know it's like one of those things that's easy to say but hard to to actually do it yourself. But you have to understand that it happens to everyone, to every trader, and don't worry, and don't start doing stupid mistakes like not putting in a stop loss next time you put on a trade. Okay, next we got is taking profits too early. This can be one of those psychological things that is common even amongst some professional traders who just take their profits maybe too early. So let's say that we have a swinging opportunity here. It's the same currency pair, so again we're just going to take advantage of this particular trade. We have a consolidation bar here, spinning top. Okay, so let's say our entry is here, stop loss is just below this candle, just there. So we get triggered, and then we're like, okay, this is fantastic, and then you're like, okay, this is slow momentum, and you're like, you know what, I'm just gonna close this trade. So it doesn't seem like it's moving at all, or something like that. And then you just close the trade, and then it just rallies up, and then you just become upset. And the problem is with this is that when you take your profits too early, your risk reward ratio tends to be less than 1. So if your win-loss ratio is, if your win-loss percentage is around 50%, so, half your trades are winners, half your trades are losers. If your win-loss ratio is less than 1, that means that your winners are much smaller than your losers, and therefore you're going to be consistently losing money. Okay, next one, we got stop loss placement mistakes. So this is when, again, this problem is rather persistent with people who had, like, let's say 2, 3, 4 losing trades in a row, and in order to just make their losses a bit smaller, they just place their stop losses too tightly in some cases, and just general market movements like these little spikes here just knock out their trade, and their risk reward ratio will just won't be consistent. So let's say we got another opportunity here. We have good breakout, quite big momentum, as you could tell here, a bit of a pullback, which is quite nice. So let's say we put our trade just there, stop loss here, entry is just there, and we just start moving up. And let's say after every other candle, behind, you just place your stop loss just too tightly, and you just get stopped out, as you could tell, and you wouldn't have made the full, you wouldn't have taken advantage of the full move. And we keep seeing this, consistently when people place their stop losses too tightly. My point is, guys, again, is to stick to the strategy. If it's a good strategy, especially if you're new, if it's a good strategy, stick to it. We keep seeing this, those stop losses are just placed way too tight because they had, a bit of a problem before. And then once they place them too tightly, the risk reward ratio doesn't come out as well. It's not 1-1, it would be less than 1. And if the strategy is a 50-50 win-loss ratio, and you're if it's a 50% win-loss ratio, and then your winners are smaller than your losers, then obviously you're just going to be consistently losing money. Okay, so the next one is the no stop loss placement. One of the worst things that new traders do. This tends to happen when new traders tend to get whipsawed. So let's say that, you know, they place their order somewhere, and then they get a spike like this, and then it triggers their stop loss. However, it carries on going in the same in the direction they hoped for, and this sort of caused them psychological pain. And then they decide, you know what, I'm not gonna put a stop loss in this particular situation. Okay, so and they just basically put a psychological stop loss somewhere, and they don't adhere to it. So let me give you an example. Here we have, you know, a bit of a pretty nice swings, you know, prices making higher highs, higher lows, as you can tell, just retracements there, another retracement here, you know, a prototypical swing range formation. So you just want to take part in this swing. And let's say here we got price consolidating, a bit of price consolidation. It's a spinning top. So let's say that you place your entry here and your psychological stop loss is here. Okay, so you're not gonna you're not gonna actually place the real stop loss. You're just gonna have a psychological stop loss as a new trader. And then, you know, it gets triggered, moves up. You're like thinking, fantastic, you know, this is just a amazing move. You know, let's say your target's around there, second target's, you know, a bit higher up, and then it plummets down. And the thing is, obviously, if you're a disciplined trader, fine, okay, you can, you know, remove this, you know, just close the order. However, if your emotions start playing in and you start getting very emotional about this situation, then you can go so far to the point where you can actually get a margin call. So my point is, guys, be careful with use your stop losses right at the beginning. Some professional traders don't use stop losses, that's fine. However, you're not a professional trader yet. You have to, you know, develop your psychologies, develop your game before you start experimenting with stop losses and whether you should put them in your trades or not. Well, thank you very much, guys, for watching this video. I hope you enjoyed it. I hope it explained some of the psychological aspects, you know, regarding trading, and some psychological problems which you may encounter in your early days of trading. Now, if you have any other questions, if you have any queries, just please send us a message or post us a comment, and we'll be happy to answer any queries for you. As I said, whipsaws happen to everyone. They happen to all traders, so don't worry if they occur to you, because they occurred to me plenty of times. Don't take it personally. It's not the market moving against you. Don't start revenge trading, and don't start, you know, not placing any stop losses, or just, you know, placing them too tightly, or taking your profits too early. So I hope you enjoyed this video, and happy trading, guys.